Basant, great to have you on our 8th anniversary. Thank you very much for taking out the time. How are you looking at where the markets were 8 years back to where they are today, and what is expected over the next 8 years?
Congratulations on having completed 8 years. And let me tell you, the significance of a business channel enhances itself when there's a bear market around. Because in a bull market, you don't need channels, you don't need analysts, you don't need anchors.
Everybody just rides the wave.
So whenever there's a bear market, yeah. So you have to give some credit to Nikunj, because whenever the market falls, I remember one line which he keeps repeating, which is, never waste a crisis. So, so whenever there's a 200, 300 fall in the Nifty, so I just remember what Nikunj says, and I'm not doing it to flatter him, I've told him so many times before also. So that's when a channel's significance comes in. 8 years back to now, there is more information.
I wanted to add in that, while we're talking about our market coverage and the knowledge that we impart, I'm a big fan of Nikunj myself, and I of course, aside of being my boss, it's just been a great working experience, because I think I've learned a lot from him, and I think a lot of our viewers also have done so.
It's Itino's birthday, not a birthday for me. But thank you, Basant, thank you, Tanveer, and thank you, viewers. But okay, a channel is always complete if you have everything going for you. The right intellect, the right anchors, the right questioning, and the right guest. And Basant, where we are right now as India's #1 channel, wouldn't have reached here without your support and without your opinion as well. So Basant, you're this famous guy in Indian stock markets. I mean, you are the folk hero of Indian stock markets and the man who identified housing finance companies. So let me ask you some pointed questions on your area of expertise. Since you like to quote me, I like to quote Howard Marks here. And Howard Marks once said that if an asset class gets a good nickname, it's a bad investment. If an asset class gets a bad nickname, it's a great investment. Housing finance as an asset class, as a cluster, has a great nickname right now. So is it time for minority shareholders to get out? Do you think the cream of the money is over?
I would not think so. I mean, we are super bullish on this space, as you know, for several years now. And I think it's just, see, in a stock market, you have to be like a camel in a desert, because you don't get water every time. So when you get water, just drink truckloads of it and say, when I don't get water, this is going to help me. So when there's a bull market around and when things are doing well for you, don't be in a hurry to take profits. You can always sell a stock 20% down, 30% down, if the company reports bad earnings. But as long as the earnings are there, and as long as the earnings are an accelerated medium, then I think you should just hold on and play it that way. So I think between the companies that we see and that we own, of course, we've shifted gears and we've changed horses and camels and bullock carts and whatever you might call it. But I think the entire space is set for a new thing ahead for the next 2, 3, 4 years. I think 2019, 2020. So there is still some gap to go. How hard it can go, how far it can go, how crazy can valuations get, we don't know, and it's better not to judge that. But mentally you're prepared that whenever the bull market ends, it won't end unless, it really gets into a frenzy. So as long as people are asking you whether to invest into these stocks, I think there's no end happening. But the moment people start telling you that this is the space to be in, I think that will be the time when the market would end, at least for these housing finance companies. And time and again, for the last 15, 20, 30 years, 100 years maybe, the sectors that have had the highest growth lead the bull market. So, these companies, the ones which are growing at 30 will suddenly grow at 40, the ones which are growing at 35 will grow at 40, 45. So I was talking to a CEO of a very prominent HFC a couple of days back, and he said it's not a question of whether we can grow at 35 or 45. It's the question, once RERA comes in, once the government fiscal and monetary incentives all come in, then the question would be whether the entire sector can grow at 30%. So I think there's still some more to go, but obviously things are expensive, and if a bull market leader isn't expensive, then be very wary of whether it's a leader or not, because leaders always are expensive. L&T in 2008, Infosys in 2000. So you could have bought in 98 also. Infosys, it was expensive, and by 2000 it went up 30, 40 times. L&T you could have bought in 2006, it was expensive, it could have bought up. This is no recommendation. We're just discussing ideas here.
Of course, of course. And Jonathan, good afternoon. I'm coming right back to you, but Basant, I have a follow-up question for you. So, okay, so let me construct the scenario, Basant. The macro outlook for housing finance, and if I can top it up with government's onus on low-cost housing finance, is great. you can stretch an Excel line and talk about a 15 to 18% growth for next 5 to 7, even 10 years in this case. But the housing finance company right now, or the housing finance sector, you got about a dozen companies now. You got Growth Finance at about 9 or 10 times book. You got Divan Housing Finance at the lower end. That's at about 1.5 time book. They both are in the same business. So how does one figure out which is the right stock to buy?
I think, people bet on the fastest horse if you're at the race course. And stock market isn't a race course. I think it's the temple of capitalism for me. But it becomes a race course at the end, because once the bull market catches frenzy. So we bet on the top 2 fastest growing companies, and it's your 8th anniversary. And if I can stick my neck out with full respect to the market, because markets can prove us wrong any minute, any second. I think before your 11th anniversary, one housing finance company would trade in 5 digits. So it's being recorded and I know it. So I think that's how bullish I am. But this doesn't mean that things cannot change. If they change, we'll take a view later on and move ahead. So I think the place to be betting is with the highest growth companies.
So will it be a three-digit housing finance company which will trade in 5 digit, or it will be a 4-digit housing finance company which will trade in 5 digit?
I mean, 3 and 4 digits is 999 and 1000. So 1 rupee separates the digits. So, and 5 digits also means 99,999. Why limit yourself to 10,000? All jokes, but that's how you can look at it.
How much of your existing portfolio you would say one should commit to HFCs? It could be a combination of 1 stock, 2 stock, 3 stocks, 5 stocks. That's anyone's guess. But as an overplay, as an overarching theme, are you happy to allocate more than 25 to 30% of your total portfolio to these companies?
No, that's more of a case of a personal preference. Personally, we are a lot more than the number which you said, but that's because we prefer to be on the fastest horse and that way. But I think for a normal guy out there, he should at least have 15%, 10 to 15% of his portfolio in housing finance companies. But that's always a change, depending on how the person's mindset is. And mind you, these companies, they won't go bust unless they've gone up several hundred times. Because, with 9% mortgage to GDP, Fannie Mae, Freddie Mac went bust in 2008. But that's before they went up 100, 200, 300 times. So the runway is still there, and you have the government, and there's so many things. And it's a secured lending business. It's not a PSU bank or a unsecured lending business. So ultimately, it's very difficult for any of these companies to go to zero. So, but that is how markets are. But I think one should be aggressively betting on these companies. And there are companies which you get at 1.5 times book, 2 times book also. If you're a little afraid of things, you can go and buy them also. But we chase growth, so that's how it is.
Basant, for somebody who's looking at the screen and seeing that the Indian market has returned 20% plus thus far into the year, and is being part of those lengthy, never-ending discussions that the market looks expensive, what would you say to viewers tuning in right now and being a part of that dilemma?
I mean, if you have a 2, 3, 4 year view, then this might be somewhere closer to the bottom of the mountain than towards the top. But if you have a 3-month view, then nobody knows, neither me nor you nor anybody else. So I think, the first problem with the viewer is he has to start buying, and he has to stop buying. In November, we were saying that this is not a good market. Because the markets are down. So ultimately, when the markets are up, we say markets are good. But basically, markets are good when they are down. So let me tell you, if the Nifty falls 1,000 points, nobody's going to buy anything. If it goes up by 400 points, you'll have more money coming into the system. So that's the normal thing, and that's why everybody cannot be rich in the market at the same time. So I think people will come in as the Nifty goes up. All that talk of asking people to come in when the Nifty falls, I think that's not going to happen. And we see it in our funds. When the Nifty is up, people start calling more and they want to put in more. So that's the fact of the market and the fact of life.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.